Hey, good afternoon. This is Trader Tim coming to you from EminiMind.com, and today's video it's June 13th and kind of a follow-up to Thursday's trade recap video. And a couple things I wanted to touch on. The first thing being what to do when we go below a 61.8, and with the context of putting on a new swing trade or adding to a long-term position. So um, if we look at the daily chart here of the ES, in Thursday's video, we were saying, okay, if we can come down and trade at the 50% on Friday, we're going to have likely a good opportunity to get long. Instead, we gapped down below the 61.8 and then sold off more and closed lower. Therefore, at that point, rather than buying on that day at the close, you're better off waiting for a full retracement to those lows. And today we were even got a little bit more benefit where we went below those lows. If you look at the full kind of halfway back here on the ES short, we didn't really trade at it, but it does kind of give us a projection down here around 36.13. If we zoom out even further, yeah, it's gonna go way out. Something like that. The full lows from COVID to highs. We'll call it a 3,500 is that big round number. So when you break a 61.8, rather than trying to get in ahead of the 50, I'd much rather wait for us to come down and trade at the 50 and close somewhere around the 50% before adding or initiating that new swing long or adding to a long-term position. So there really wasn't a buy opportunity on Friday as I saw it because we gapped down and then closed lower. Um, if we had gapped down like this to the 61.8 and then rallied and closed up at the 50%, I'd consider that a buy. But at this point, the opportunity was either coming up here at the close as we've got about 20 minutes to add to some long-term positions, or wait through the Fed meeting and maybe Thursday, see what the reaction is. And with the Fed meeting coming up on Wednesday afternoon, typically Tuesday is a little bit quieter. This week might be a little bit different just because there's kind of this last couple of days have had a big drop and an increase in volatility. Still not a massive spike in the VIX, but nonetheless up to that downward trend line that we had drawn and we talked about on Thursday. The big thing of note today was the breadth advanced on the decline line and the nicey tick were extremely bearish. I don't know if I've ever seen a breadth reading that was bigger than minus 100. Certainly haven't seen that on the upside. So yeah, real bearish breadth readings. When you have that kind of a reading at the open, you can pretty much sell at the open and hold to the close. A really big 15-minute breakdown today. This one, I was chatting with some of the other traders in the Discord, and at the time I put on the trade. So we talked about typically I'd take most of the position off at plus 20 points, but this one I decided to take half off at 20 points and then trail my stop above the 15-minute candles. So the second one ended up getting taken out, or the second half rather, getting taken out above the 1, 2, 3, 4, 5, the seventh candle here, and that one went for like 28 points or so on the second half of the position. So a really good 15-minute breakdown today. Last week we were chatting with a couple folks, I think it was in the Discord, asking about what was the biggest drawdown I've had with that 15-minute breakout trade. And then when I went back to last year, it was like I think 7 in a row, or 7 days in a row, trading days in a row where I didn't have a winner. I think one of those was scratch, but then the rest of them were losers. And so when you look at, or when you get into a situation like the last 2 weeks, we really didn't have any big winners to write home about. But when you look at your trades in groups and you take the back-to-back 20-point winners that we had 3 weeks ago, and then you kind of tally up all the trades since then, and you get to today's 20 point and change winner. You end up with, even with just one contract, you're up to 40 points. So it's helpful to look at your trades in groups rather than just looking at one or two trades. They could be an outlier, and you don't want to be changing your strategy drastically based on one or two trades. Look at 20 trades. Look at your trades in bigger chunks, and then those patterns will be more meaningful. Things will stand out to you in a much um, more beneficial way that you can make decisions. And if you do decide to make a tweak, it's not just based on an outlier. You've got 20, 50, 100 trades that you're working with. The last thing that I want to touch on, we'll keep this video a little shorter today. The last thing I want to touch on is one of the things that I like to ask myself when I get into a swing position, or not even really a swing position, but more like a speculative Bitcoin kind of trade, where I'm holding it longer than just a couple of weeks, is you get in a position, and we've all heard the phrase money you can't afford to lose, and that's all well and good when you're putting the position on initially, but when you're in a situation that you have a lot of unrealized gain in a trade, mostly a speculative trade like this, I like to ask myself, am I comfortable letting this position be cut in half? The money that I've made here that I'm looking at in my account, if that number was cut in half, would I be comfortable with that and letting it come down to ride it back up to the next wave? Sure, it could double, but I'm not so concerned about doubling from here after I've made a big gain. It's more about, am I willing to let it come down, and whoever knows how long it might take to rebound. And so most of you know that I bought Bitcoin really, really low. And so the two kind of bigger sells that I made were, the first one was at 2,500 in like 16 and 17, somewhere around there, 16 I think. My buy-in was 210, my initial purchase, and so moved to 2,500 was pretty monstrous at the time. And I said, am I willing to let this position be cut in half? I've already made over 10x here, and no, so I sold a little bit, and then bought more, and still having most of the position from 210. But then when we came up to my second sell was 59,000, and I asked myself, okay, this is probably a once in a lifetime opportunity here. Made a lot of money. Things have really taken off. Am I willing to let this position be cut in half to maybe see Bitcoin go to 100,000? And the answer was no. I wasn't comfortable letting it come down like that, so I sold most of it, converted the last little bit I had to Ethereum, and that's where I stand right now. The fast forward to when Bitcoin was in this little kind of rising channel, if you will, back here, I put on a little position, a little bit of an ad, at 38,000. And it was back here on the touch of the uptrend line. And when I did that, I'm saying, okay, I'm putting this position on. Am I willing to, what happens if it goes down from here and then I'm cut in half, or I end up with a quarter of what I'm investing in at this point? Am I looking at this as a short-term trade, or am I willing to ride this one out? And the answer there was, yeah, I'm willing to ride it out 5, 10 years, whatever it takes. If there needs to be some kind of tech bubble in the crypto space to get rid of all the junk, and then coming out the other side of that, then you might see your Amazons, your Microsofts, your Apples, just like coming out of the tech bubble. And so that was my justification for the position size in the first place, and then not just selling it on a little bit of a bounce, but instead hanging on. So if you go into position with the kind of mindset of, what is my time horizon and what am I willing to give up when you are in big profit territory, it can help relieve a lot of I guess stress and mixed emotions on do I exit the trade, and when the market starts selling off like it has, if you've got money in a long-term account, what's your time horizon? And at this point, it's pretty much too late to think about selling. So um, better to be at this point buying and holding, for the longer term. The benefit of obviously with day trading is we can get in and get out and be very nimble and not have to hold everything overnight. But I know most folks have, even if you've come to trading and that's your full-time job now, you may have a 401k or something that you're still hanging on to from a prior job. And if you just hang on to that, and your time horizon's 30, 40, 50 years, even just buying up basic S&P index fund will do you very well. So um, no need to freak out if you're kind of been following along for a while here with EminiMind. We've talked a lot about taking some profits in the good times, making sure your house is in order, and when the market does sell off, there are opportunities to then build wealth coming out of the other side of that if you have the capital to be able to invest. So I hope everyone has a good week. Be safe out there. We've got Fed meeting and expiration, so tread lightly. I probably won't be taking too many trades this week. Thursday would be the day that I'd be looking to get active. So if you have questions, drop them in the comments below. I hope you have a great rest of your day, and I'll talk to you soon.